due diligence. You need to do it. And we got a top 10 list Mark and I are going to crank through. If you don't understand how the business or investment makes money, don't invest. If you aren't giving adequate documents outlining what's been explained to you verbally, do not invest. Welcome everyone to the Directed IRA Podcast with Matt Sorensen and Mark Kohler. We are delighted to be with you today talking about due diligence. You need to do it. That's the do part.
Well, there we go. Well, the cat's out of the bag. I guess most people saw the title of the show before they clicked on it too, but you just came right out of the gate. Maybe not.
Maybe not. That's what we're doing. We're getting right to the point here on the Directed IRA Podcast. And we got a top 10 list Mark and I are going to crank through. All right, this is number one. This one is really important. If you don't understand how the business or investment makes money, don't invest. Just don't. You must understand it. And I can't tell you, I've had clients, even stuff that, cryptocurrency is one thing that people didn't understand, or they weren't understanding the specific thing they were doing in cryptocurrency. But even when I get it on real estate clients, they send me this subscription document to some real estate fund. And I'm like, what are they investing in? Real estate. Where? What's their strategy? Have they done this before? And we're going to get into some of these other things. And it's like, how are they making money? Yeah. Are they going to cash flow this? Are they going to sell it and get a gain from appreciation? Like, what is their strategy? No. And so make sure you understand what the promise is on how it's going to make money. And you've got to be able to connect the dots for yourself. Otherwise, you can get duped. Okay, this is the Booner comment now. Okay, color commentary. I have two. I think I need to tell my dumb money story quickly. And what is he, the king of Omaha? What do you call Oracle of Omaha?
Oracle of Omaha.
Oracle of Omaha. Okay.
Now, for some of you that are Warren Buffett fans, he has said over and over and over again, he only invests in what he understands. And he's kind of done pretty well.
He understands Coca-Cola, Dairy Queen. I just think some of the funny stuff. Geico Insurance.
Yeah, he does. So that's a fair point from Warren Buffett. You can always think about that. But I had this client, and some of you have been a regular listener over the years have heard this story, and I want you to remember this story. I want you to tell your family, your kids, your friends, your partners, because it's such a good story. But I had this Texan real estate investor, and he had quite a bit of money, and he had really worked hard over his life, and he was colorful. Some of those Texans can be pretty colorful guys. And he was just like, you know, and so we were talking about this LLC we were putting together, and he's like, and I was kind of asking him like, well, why are you doing this? I was kind of like getting into his mind on why he was investing in this and his concerns and all that. I kind of wanted to learn from the guy. I mean, that's a benefit sometimes I really enjoy, is that I learn from you folks as much as you may learn from us. And so I was kind of asking him some questions. He goes, Mark, let me tell you, when I'm doing a deal, if I can't figure out who the dumb money is, it's me. And I'm like, what are you talking about? He goes, look around the table. Look at all the people in the deal. There's always someone sitting there that's just along for the ride, that doesn't understand what's going on, and they're just putting money in. If I can't figure out who that guy is, it's probably me. I'm out. and I was like, oh my gosh, that was good. So that was a terrible Texan accent, by the way. But anyway, the point is, don't be the dumb money. All right, number two.
Yeah. And sometimes there's win-win scenarios. Sometimes it's a win-win, but this goes back to that same point. And what Mark's saying is, make sure you know and understand the investment in the deal. If you don't, then maybe you are the dumb money. Okay. And you don't know that because you didn't understand the deal. You just got all excited about it and got sold something. Okay. Number two. Okay. If you aren't giving adequate documents outlining what's been explained to you verbally or sold to you or put in a presentation, do not invest.
Now,
this must be in writing. Yes. And we've talked about this before. The parole evidence rule. Okay. This is something, when Mark has a parole hearing, he brings in his parole evidence, his PO, we want to get early release or credit for whatever.
The second rule is, if you have your PO on your contact list, you may need to make some adjustments in your life.
Part of your favorites on your phone.
yeah, your PO. What's your favorites? I'm leaving for Vegas. I better call my PO. Okay, now.
Crossing state lines, just want to let you know.
Yeah, now what the parole evidence rule is, I don't know, what is that, Latin or some damn thing? I don't know. But the parole evidence rule, everybody, and Matt is so good at this, but I'll just define parole evidence. Yeah. Parole evidence is, I guess, Matt, correct me if I'm right, it's the evidence that it's excluded because it was verbal. If the verbal conversation does not make it into the written agreement, it's gone. It's parole. Yeah. It's no good. It's not good evidence.
Yeah, because outside a court of law is not going to look at it. They're going to say, well, if it was important enough to not put in the documents at the final contract, it must not have been important. You might think it was, but if it didn't make it into the final contract, we don't care. We assume you negotiated that away or that wasn't part of the final deal. How do we know? And so I don't care if you got emails saying, we promise you this, or in a presentation that says you're going to get this. If it's not in the final documents of the deal, you are not getting it. You're not entitled to it. You cannot bring a contractual claim for it. It's parole evidence, which means outside of what's going to be enforced.
Okay, Booner
parole evidence is bad.
Parole evidence is bad. Now, Booner moment, here, quick example. I was helping a client last month work on a cell phone contract agreement. They were going to lease some space on their land for a cell tower. Some of you that have land that have been approached for billboards, cell towers, pretty cool deal. And this guy, they were wheeling and dealing, making all these promises, and they were on the second or third draft of the final agreement. And my client was so smart, and she said, let's read it one more time. I'm like, all right. And I read it, and oh my gosh, they had excluded 2 sections that were in an earlier draft.
Yeah.
And if we would have signed that, too bad, too sad, and you've got to look at all those details. We could do the Arnold Schwarzenegger story, but that's too much. Okay.
All right. Love it.
Number 3.
Okay. Number 3, if you're told that you can get a commission for bringing in your friends and other investors into the deal, and you're not licensed in financial services to do that, don't even invest your money, let alone try to bring other people in. That means the people raising money on this deal don't know the law or don't care to know the law. Either way, you don't want to be investing with them. Okay. So don't get caught up in that. We've seen that over the years. Oh, I'm bringing these 5 other people in and I'm getting 10% of what they invest. Oh, really? Are you licensed as an investment banker or in certain financial services where you can get a commission for that? You got a broker dealer this is running through?
Oh, it's a finder's fee.
No. Yeah. Yeah. And be super careful about that. Okay. There is a small little exception for finder's fees, but it could not be based on who you bring in. Okay. It's not commission based. It can't be any of that unless you're licensed. Yep. So beware.
Quick example. We had, and this was Matt. Matt, you're of course going to remember this story. So I'm quoting Matt in vain here, but he's present. So I usually talk to Matt behind his back, but at this point I'm talking in front of his back. So he, remember that guy?
Where this is going? Where this is going?
Where this is going? Hear me out. Hear me out.
Okay.
Oh my gosh, there's this comedian that's so funny. It's like whenever you hear me out, buckle up. He's like, your friend's going to go, okay, I'm going to hold you by the legs and lower you into this well. Now hear me out. Hear me out. There could or could not be fire, but hear me out. Hear me out.
Yeah. There's lava at the bottom of this.
Yeah. Hear me out. But there was a guy, Matt, if you remember, that PPM, which is a private placement memorandum. It's a securities deal that Matt spearheaded for a client. Everything was hunky dory. Guy calls back 6 months later, wants to do another one, but he wants to tweak it and start adding these bells and whistles. Matt's like, nope, we're not on board. Don't do it. He's like, come on. Nope, don't do it. Guy went and did it anyway. And I think it was a year later where one of our attorneys in our office was watching MSNBC or CNN, and there's his face, boom, being prosecuted. And we were like, holy crap.
Yeah.
And they called.
I remember that. That was actually one of the attorneys in the office. And and this client just totally, it's kind of like these securities laws is you've got to color within the lines and you cannot go outside the lines. And that's what this client wanted to do. And luckily we were like, you're on your own, man. We're done. We ain't doing it that way. Yeah. And so, people get aggressive in raising money and start coloring outside the lines. So that's a warning. Sometimes the laws are frustrating. I get it, and you want to be like, man, that's not how it should be. Well, that's how it is. and raising money and people investing money, you got to color within the lines. You don't have a choice. We don't like it, but we're only going to advise you into what you can do. We're not going to be like, yeah, let's think of a way to get around it. I mean, if there's a legit way, maybe, but you're on your own if you want to go, go violate the law.
And so everybody, like playing around with the tax deduction and being aggressive with a tax deduction loophole, as long as you have a reasonable argument for what you're doing and it makes sense and there's some sort of precedent or whatever, worst case scenario, penalties, interest. That's it.
Yeah.
You're not going to jail. This kind of stuff, when you're playing around raising money and you're trying to find a loophole, you're going to jail. Not good. Yeah. It's just the one we do not toy with. All right.
Not good. All right. Number 4. If you're loaning someone on a real estate venture or a deal where you're basically being the bank, do what the bank would do. Go get a mortgage or a lien on the property. If it's I'm just like, why are you? I've talked to so many clients over the years. I'm lending money to someone. They're doing this real estate deal for it. Okay. Are you getting a lien on the property? No, it's an unsecured note. Why in the hell would you do that? Do you not want to make sure you get paid back? Well, he just said it'd be easier that way. Easier for them. I mean, 6 months into this, do you want to have a lien on the property to make sure you get paid back or not? I mean, the bank's not going to release money to anybody on a real estate deal unless they get a mortgage or a lien on the property. So make sure when you're lending money, particularly on real property, and there's other ways you can lend secure. Maybe someone's buying equipment or inventory in a business. You can get liens on that. It's called the UCC. Get a lien. Think WWBD. What would the bank do? Okay. Now, this is not a good way to run your general life, but when you're giving people money, okay, the banks have figured this out.
Yeah. If you want to live by WWBD and you want to live a very slow paced, red tape, get nothing done lifestyle, WWBD. But if you're going to loan someone money, it's definitely
you wouldn't even get out of your house in the morning if you did that for your whole personal life. You couldn't even put your underwear on. You'd be like, I don't know.
I know.
Did we get approval from this? Is this your compliance? Did I fill out a form properly for this?
I'm hiding in my
pin.
I'm hiding in my closet waiting for approval to leave. WWBD. What would the bank do?
But serious, in investing your money, think like that. And it may sound dumb, or simple, but really, what is the bank going to do? There's going to be some other things they're going to do. They're going to do a credit check on that person. They're going to look into their background. Some of these other things we'll talk about. But they've decided that they want to really make sure they get paid back. And so they're going to go through a couple of these processes to make sure that they're entering into a good deal.
Okay, quick example. That's my job. Is myself personally, our family, my brother and my dad and I, it was about 8, 9, gosh, it's probably been 12 years ago. It was far earlier in my career when I thought nothing could ever go wrong when I invest, but I'm just going to tell my clients to be smart, but not me. And we did a loan deal on a 6-plex. And I did not do the due diligence to do a complete title search. And come to find out, we were in 4th position when I was told we were in 2nd. And there was some emails and this and that. And you would go, Mark, that's a rookie move. I know. It was dumb. And we learned a hard lesson. And we lost. Yeah. It was about a $100,000 loan. And we lost it. We were way back in line on this deal. And we were just taking what we were told. And so that's part of that due diligence with these agreements when you do a property deal. Okay.
Yeah. Great example. All right. Number 5, if you're investing in a private placement, private offering, crowdfunding offering, startup, whatever it may be, you're going to have a lot of documents. If you don't, that's a red flag. If it's one piece of paper with some wiring instructions on it, and then that ain't good. That's not enough. All right. Okay. Oh my gosh. You should get documents if someone's out raising money. They're supposed to do it legally. Also, you need to get those to understand what the heck the deal is. You need to know this. What am I really getting out of this? That's going to be in the documents. So be prepared to be reading some documents, going over them. You may need a lawyer if it's something new. Of course, we can help. Just get a professional. This is not an advertisement for our services. But for those types of deals, even a real estate deal, I don't care what it is, there's going to be documents. There's going to be paperwork outlining this.
Can I give the heart and mind connection example, or is that going to come up in the next 5? Is this a good spot?
Let's do that. That might be good on 7, actually.
Okay. All right.
You could give it now too, but I think it'll be really good on 7.
Okay. Actually. Here's what I'm going to do on the mind side. Then we'll do the heart on 7. Here's on the mind side. People. Oh, here's where I wanted to go. So many times we're looking for reasons to not do the deal. It's a specific mindset. So we're like, oh, this deal is going to be awesome. And if we don't see anything out of line, we're going to do it. We really should be looking at it in the opposite manner. Like, you better be talking me into this, like with documentation, support, material. I really need to be in the mind. So if you're not seeing a lot of documents, that's a red flag. In your mind, go ding, 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 ding. You know, be alert. We're for some reason, and I get the same way, you know, glass half full guys like me, we have this problem. We're not aware of these little red flags enough to stop. And that's one of them. There's not enough documents. Ping. Hold up. All right.
Love it. All right. Number 6, investigate the background of the person with whom you're investing money. When Mark opened this up, he talked about, you know, looking at the deal, analyzing the deal. And let's just take an easy example many people can relate to. A rental property. I'll have clients that analyze the heck out of the rental property. What's the mortgage interest? They got the best mortgage on it. Or maybe they negotiated creative financing. They know what the cash flow is. They know what the market is. They have an expectation of what the appreciation is going to be in 5 years. They've got an Excel spreadsheet with their cash flow and their appreciation and all this stuff about how they're going to make money on this property. They've factored into tax benefits and mortgage pay down and all this stuff. And then they own it and they get their first application from someone to rent it and they lease it to them. They didn't do a background check on that person. They didn't talk to the prior landlord. They didn't see if that person had a freaking job. They didn't check their credit. All right. When you're doing business with someone, even in a landlord-tenant scenario, but even more importantly, in a partnership scenario, or you're investing your cash with someone where they get to do whatever the heck they want. You have no voting rights. You're like in a private fund. You need to know the person you're doing business with. You're either going to make money on this deal or you're not. And it's dependent on this other party in the deal, the tenant that's going to pay you rent or not, the person that's investing in the private fund that's going to go make money on this or not, the business partner that's going to really pull their weight and do what you're expecting in the deal or not. Yeah. So investigate the backgrounds of those people.
And I thought you were going to say this, and it's of course, right in the same example, is you look at the rental, and let's say you really look hard at your tenant. Fine. Do you have a partner in the deal? Did you look hard at your partner who brought you the deal, who's getting X percent, who's going to be the manager from afar? I had this couple, this cute couple, they were out of Seattle and they had gotten lined up with this young guy in his late 20s who was a wannabe real estate investor, developer of little short-term rentals. And he was out, it was like Minnesota or somewhere, and they had a connection to him, and they said, we're going to partner with him. We can get King County, Seattle area. You're not doing rentals. It's like investing in Orange County, California. It's brutal. So they thought this little Minnesota town would be great. This guy was there, and they created a little partnership. They were going to be the money, and he was going to do all the work, find them, and do it, which is a very common partnership structure. And they were very involved in managing, or looking at the rentals with him and all that, but they didn't do enough due diligence on him. He started to not show up mentally, physically. I don't want to say he ever stole from them, but he definitely did not follow through on his work ethic, on his promises and all that. And these were great rentals, but it was a bad partner. And it was just,
that's sometimes it's a great business deal, great real estate deal. And the person you're doing business with, that if they're the ones controlling it, they can screw it up. So, make sure you got the right team, not just the right plays being called. You got the right person executing the plays on the field. You know what I mean?
Ooh,
college football coming up.
Woo! Little NFL preseason there.
Yeah. Okay. Number 7. If you're pressured that this opportunity is going to pass, if you don't invest now, let it pass. There's no deal worth overlooking all this stuff and rushing into where you're just going to say, I'm in. I don't need to know anything. I'm in. Here's my money. Where do I wire it to? Okay. Don't be dumb. Don't do that. Yeah. Let it pass. There's going to be another deal around the corner.
Oh, and I want to say that, Matt, I love what he just said. Everybody listen to that. Matt and I can promise this right now in perpetuity. There will be another deal a month from now, 2 months from now. Don't ever feel like this is the get all end all. If I don't do this deal, I'm never going to buy real estate again, or it's never going to happen. You'll have time. And this is where you don't want to go the other direction and go into analysis paralysis, where you're like, I never do a deal because they're never, it's just, and this is my engineers. They got to find this perfect deal, perfect, and they're going to wait till that perfect. And then they miss so many good deals. So you've got to find that balance. Yeah. And I think it's about that heart and mind. And that's what I was going to say a little bit ago, is that it's got to feel good in your heart. You're not being pressured. It's got to look good on paper, and then pull the trigger. It's okay. Mm-hmm. You're never going to have complete certainty. That's why you get a great rate of return. It's called risk.
Yeah. Yeah. So, but don't get pressured into it. You've got to, and we've talked about this before, Mark, it's like, you got to be talked into this. Like, don't try to talk yourself out of it. Like, you got to find the reasons to be in it and like know them. Don't just be sold them and be pressured into it. So take your time, do it on your terms. And remember, you have the money. There's a ton of power in that. Mm-hmm. If it's really a deal that they need your money for, don't let them create a sense of urgency. Take your time. If they're not going to give it to you, wait for the next deal. You've got the power. You've got the money.
And here's the thing. We're not saying don't do the deal if you're pressured. Just slow it down. Mm-hmm. And that's a great time to say slow it down and then let that little curiosity brew. Do a little more due diligence on the person. See how they react. If they get mad, angry, and they're not understanding and want to provide the data that you're interested in, a lot of information is going to come out when you slow things down. It could be good. Yeah. They may slow things down and go, you know what? You're right. Let's slow it down. And you're like, okay, that's what I wanted to see. But if it gets worse, then there's your answer. So
yeah, love it. And I like, I was just going to come back to the adage from Rage Against the Machine.
Oh,
take the power back.
Wow, man, you're quoting Rage
Against the Machine. Take the power back.
Man,
I mean, you got the money, you got the power. Take the power back.
Okay,
I'm serious about that. That's a big deal, and a lot of people don't realize that when they're investing their money, whether it's their IRA or personal funds, there's a ton of power in having the money.
Well, gosh, since you're quoting Rage, I want to make sure I get the right song because I've got it, but I want to make sure it's Know Your Enemy or Know the Enemy. Know Your Enemy. That's right.
That's Rage Against the Machine also.
Yeah, I was just going to quote Know Your Enemy, which it's right here on my playlist. It's a good workout song. I'm like, know your enemy. And sometimes you're your own worst enemy. It's a really deep point.
Oh, I like that.
But we want these deals. We want to make progress. We want to go. And we're the ones, like I was 10 years ago, 15 years ago, doing that deal. I was my own worst enemy. Yeah. It wasn't the project or the person. I didn't take the time to do it right.
On that one, this is a great example. I had a client that was a pretty good investor, but he was telling me he had to realize he had to know himself because he was a salesman at heart. He's like, I'm a salesman. It's how I've built my investments and my business. And he's like, but you know what? As a salesman, I get sold fast. He's like, I just get sold. I love a good pitch. And if I can get sold on it. He's like, I own timeshares for crying out loud, And he's like, I get sold on stuff. But he's like, but I've realized that as I've gotten into investing, I know myself and I know that I can be sold on stuff fast. So I've been able to take a step back, take my time, document it, write it out. What this client likes to do is he says, I literally like to take notes on hand, rather than Excel spreadsheet or whatever it may be. And I like to run the numbers, do it in hand, have my calculator, make my notes about what it's going to be, what should be in the deal. I thought that was a great example of knowing yourself. So you salesmen out there, you salespeople, I know you can get sold faster than anybody. So just know that.
Yeah, I think it's about really, knowing your reasons, knowing who you are as a person. And this is where partnering with people that complement you, not just going out and partnering with people just like you. If you're going to go into a restaurant deal, I love it when I see a good food person and a good bookkeeping person. Oh, that's a good partnership.
Yeah.
If I see two good artists or two good food people opening a restaurant, I'm like, train wreck.
Yeah.
You need a third partner here. And so we need to recognize that. So
yeah. And the last comment on this is just the engineer you talked about earlier, Mark. That engineer needs to know themselves too. They can be their own worst enemy because they never do anything. They analyze the hell out of it. They frustrate whoever's on the other end of this deal. And they're like, you know what? You went too far in this analysis. You got into this analysis paralysis. And so you know yourself on the other extreme too. And that's where what Mark was talking about earlier. Find that happy medium between analyzing it enough, but not looking at it and going totally in blind. So
yeah, love it.
Okay. Number 8. Make sure a lawyer representing your interests is involved in reviewing the documents. If someone's like, yeah, we've got an attorney draft these documents and look at it. Don't worry, we got an attorney involved. That attorney wasn't doing that for you.
Nope.
They were doing it for them.
Yeah.
Okay.
Oh.
So you may need to get an attorney on your side to look at it for your interests. How do these documents affect you? All right. That attorney that drafted these for this fund or whatever the deal is for the person that's raising your money, they did it for that client. That was their client that they were doing this for.
Yeah. Oh, I love it. And for some reason, when you brought this up, I just thought of Kramer as the Marlboro Man. And I think when he was cutting the deal with the company, they were like, he's got his attorney that's like, no, you did what? You did what?
Yeah.
And you're like, that's not a good deal. He's like, yeah, but I got free cigarettes for life or whatever it was. It's like, why didn't you talk to me? And so Kramer's out there wheeling and dealing and trusting their lawyers rather than his own. And that was a funny episode. If any remember.
That's right. That's a great. I think it was it the lattes when he burned himself on the lattes? Then he got free lattes for life.
That was the latte life. And he was Marble Man. Okay.
And in the settlement thing, they're like, we're prepared to offer you free lattes for life and all. And he's like, deal. And they're like, all the other attorneys look at each other and they're like, okay, we're done. They're going to offer him millions of dollars.
Oh my gosh. Oh.
Did I tell you to talk? I didn't tell you to talk. Did Jackie Chiles tell you to talk? Jackie Chiles didn't tell you to talk.
That was a great scene. I know the Marlboro Man was one in there too. There was some sort of lawsuit too. But anyway, Kramer and his lawsuits.
A lot of lessons to be learned on that show. There's one right there.
I love it.
Okay, number 9. Seek the opinion of another investor, business owner, or friend whose opinion you trust. A lot of times when we're looking at an investment opportunity, a deal, a business opportunity, even just something you might be starting from scratch, you're not investing dollars, you're investing your time. Talk through it with someone whose opinion you trust. Explain to them what you're looking to do.
Ooh.
A lot of times once you even explain it to your friend, you realize it's a pretty dumb idea or that you don't know what you're doing.
This is a classic one. Boyfriends or girlfriends, they get around their guys and say, let me tell you about this girl. Or these girlfriends get in, let me tell you about this guy. And they get about 3 sentences in, they're like, yeah, he's not, whatever. As soon as you start to verbalize it, you're like,
yeah, they're like, where does he live? With his mom. Does he have a job? No.
Yeah, you're like, okay. And so it is true when we start explaining the deal, and that's when you also go, well, I can't really explain it. Well, if you can't explain it, there's a problem.
We're back to number 1.
Yeah.
You don't understand the deal.
Yeah.
You don't invest. And so I think a lot of people, I like this one because you don't need to have an attorney on everything. I'm not saying go to your attorney for everything. A lot of times just another good business owner, an investor, someone whose opinion you trust, someone who's been around the block, so to speak. Talk through it with them, get their input on it, and even if you're not, I'm not even saying whether you're going to take their advice or not, you may decide what advice of theirs to take, but that process of explaining it and going through it to another person, maybe this can be your spouse, if you have that person in your life, whoever it may be, it really helps flesh out whether you're going to do this and put that money on the line or your time or whatever you may be putting into this deal.
Yeah. And I love that. And this, I'm looking at the notes of what I want to cover here too. And this is the good entry for the board of advisors. This is where, you should already have 2 to 3 people that you're bouncing your business ideas and concepts and investments off of on a regular basis. And they may be doing the same to you. This is, these little mastermind groups or networking groups, or the ladies that are walking at the beach or the forest or the trail every morning, and the guys that are going out to golf. This is your chance to have that meeting and go, hey, I got a deal. What do you guys think? And roundtable it, beat it up. And it's a great tax write-off. All that food always is a write-off when you're meeting with your board of advisors.
Yeah. Love it. All right. Number 10, be comfortable saying no. And only invest what you're willing to lose.
Sorry, did we jump to the conversation with our daughters and life, or are we sticking to due diligence? Okay.
This is due diligence, but
okay.
Sorry. Parenting advice for any of you with daughters.
Yes.
Same principles apply here. Okay.
Yeah. Number 10, you can take the transcript and have a meeting with your teenage daughter or, any age daughter.
Also, any of you police officers going into schools trying to teach kids about drugs, same principles here.
Okay.
It's okay to say no. You should be saying no more than you're saying yes. Okay. If you look at 10 deals or business opportunities, you should maybe be doing one. If you're hitting every one that comes across your desk or every person that talks to you, you're investing in it, you're going to lose some money. I mean, it's okay. You've got to be saying no. Not every pitch is something you should be swinging at. All right. So be comfortable saying no and only invest what you're willing to lose. Remember, every investment, I don't care if this is secured in first position on a piece of real property that's never gone down in value. There's still some risk to it. All right. There's other people involved. And so just be careful and be comfortable saying no. And I think this is something that's really hard for new investors. A lot of new investors feel like, ooh, I finally got an opportunity. I got a seat at the big kid table. I'm able to do a deal or an investment. And they're like, I'm in. They're like, this deal actually sucks, and they don't know that people say no. It's okay.
Yeah. And 2 thoughts. One is make Matt or I the bad guy. Make what your attorney that you use at our firm the bad guy or bad girl. We have using bad girls not as a good example. Anyway, that didn't sound right when it came out.
Make your attorney the bad person.
Yeah,
blame it on your attorney is what we're trying to say.
Blame it on your attorney. Because what you want to do is say, hey, I promise my attorney every deal I do, they're going to look at it. Well, that's expensive, or that's this, or that's that. Now you're just saying it. It allows you to get away. Sometimes you need to get away from that phone call or that text loop or that in-person meet up. You've got to say, you know what? I need to bounce this off my lawyer. I promised him. And they may be like, ugh, but it allows you to go to your safe place and think about it. So feel free to have that kind of safe word, that you're going to be like, I'm out, I need to get away. And
in other words, we're okay for you throwing us under the bus. Throw your attorney under the bus. Let them take the hit. It's okay. Yeah, we don't care. I mean, we're like, we don't care.
Yeah.
So,
and then
unless they're a client of ours, then we might care. So we'll be careful there.
Conflict. Yeah. And I was going to say something, and I want to be sensitive about this too, but I just got to get it out there, is that for you ladies, it's really regrettable, but there are more predators in the financial world as well that are going to prey on the female investor, the female at the real estate club, or and she's got money, and they're going to be using other techniques that may be emotionally charged to try to get you to invest. And it's okay to say, you know what, I'm going to take this to my board, or I'm going to take it to my attorney. And it's just like going to the auto mechanic, or they're going to say, well, you really got to have this or that. Just the other day, my mechanic said, you really need new brake pads, $325. I'm like, well, I didn't hear a squeak, or maybe I do, maybe I don't, And so I was going to take it to another shop and just have them run through and go, okay, can you check those brake pads and see what comes through? You need that second opinion sometimes. And it's okay to say no and slow down. So anyway.
Love it. All right. Well, that's the top 10 due diligence items. Thanks everyone for tuning in to this week's episode, the Directed IRA Podcast. Reminder about the Self-Directed IRA Summit, SDIRAsummit.com, coming up October 20th and 21st. in Scottsdale, Arizona. 22nd is our charity golf tournament that we kind of do in conjunction with it. Come out. It's going to be a day and a half of training. Lots of guest speakers we're going to have this year, hitting a lot of investment topics, actually, in addition to covering self-directed rules and strategies. Mark Kohler is going to be there. I'll be there, of course.
Yep.
It's going to be a heck of a good time.
It's going to be a great time. And you don't have to be a great golfer, and you don't
you don't have to golf. You can come to the conference.
And there's a little mixer the night before. We've got different levels of participation. And of course, it'll be virtually broadcast for those that cannot attend. If you virtually attend or in person, you'll get a recording. And the benefit of being there in person is, of course, the networking. We want to have people at tables that have different investment techniques or strategies. We want to have a lot of fun because a lot of times the networking is when you walk away with that new relationship, that new deal, that new strategy that you didn't think about. It comes after the conversation online. And so if you can make it, please do. It will sell out. It did last year. We can only fit so many people in the room. And it's a beautiful location. It's a wonderful time of year in Scottsdale. I'm going to take a picture here and a selfie, here on the set so we can post that out on our social media. We're going to rock it and get that out there. We've got our social media team. They're doing a good job getting the word out. So they're like, take more pictures when you're doing the podcast. Let us know what's going on. So anyway.
All right. You're responding. I love it. Well, thanks everyone. We will be back next week with another amazing episode of the Directed IRA Podcast. Until then, stay calm, self-direct on.